Begin. August 14th, 1935, President Franklin Delano Roosevelt signed into law the Social Security Act. That means that on August 14th, Social Security celebrates its 75th anniversary. It's important to recognize milestones like the 75th anniversary of Social Security, especially taking note of the role the program has played in the lives of American families, successes, strengths of the program, as well as other changes, as well as the demographic issues facing our country and the positioning of the program to meet the challenges ahead. I think it's also appropriate to take cognizance of reform proposals that have been offered and evaluate how they would fit relative to the 75-year history and central mission of Social Security. It's a great pleasure for me to have the Social Security Subcommittee gavel at a time when we celebrate this anniversary and take note of all the program has accomplished. I say that because at an earlier point in my life, I didn't hold the gavel. I held a Social Security check. My father died when I was a teenager. My family received the benefit of the survivor's benefit, which played an absolutely critical role in the ability of my brother and I to obtain a college education and to get on with our lives. So it's certainly with a policy appreciation and a personal debt that I chair these Social Security hearings looking at the program. I view Social Security as lifelong wage insurance. You pay in through your earnings years, you get security in retirement years. Program of risk sharing, social insurance. All of us insure each of us. It has worked very, very well in meeting its core mission. The program has been expanded and changed over the years. Some would note the rising tax support behind Social Security, but the benefits provided are quite different than what was initially in the legislation 75 years ago. The survivor's benefit to accommodate the widows and orphans, surviving spouses, surviving children of deceased breadwinners. The disability benefit. Someone becomes disabled, unable to earn a living. Certainly, the vast majority of workers in the workplace today have only the Social Security disability protection should they become incapable of earning wages because of a disability. Also, inflation protection added to the program, making certain that the wage replacement benefit one reaches at retirement doesn't disappear into nothing, living years in retirement and not having benefits at all, able to cope with the inflation, the real costs that a person experiences through their retirement years. And finally, greater sufficiency of premiums, greater wage replacement of premiums, especially at the lower end of the wage scales, so that people have enough to live on. The points I guess I would make in a brief opening is that, and we've got some slides, I think, to try and illustrate this point. I think we need to keep in mind the benefits of the Social Security program are relatively modest, but very essential. 6 in 10 seniors, for 6 in 10 seniors, Social Security is more than half their income. Social Security provides that role in their income still at a very modest retirement benefit. The median income of a senior household is $24,000. The average Social Security benefit for a retiree is $14,000. Those proposing vast changes to benefit structures going forward need, I think, to really wrestle honestly with this issue. If the Social Security income floor averages $14,000, how can people get along on amounts that are substantially less than that amount? The average in North Dakota, the average benefit check in North Dakota is less than $14,000 by more than $1,000. So we have parts of the country, like the one I represent, where you're getting along on less than $13,000 average check. Among those over the age of 65, only the highest 1/5 of the income distribution have another source of income that is greater than Social Security. That's because they're either working or earning wages, and this will shift when they stop working. So for those that are still earning wages, obviously the wages are going to trump the Social Security check in value. But in retirement years, overwhelming majority have Social Security as their principal source of income. The second slide shows that Social Security plays an essential floor on income security through turbulent economic times. In 2008, 401ks and IRAs lost $2.8 trillion in aggregate value, 32% of their value. I know each of us in this room would know if people had to delay their retirement decisions because their retirement nest egg was no longer what they anticipated to be as they approached retirement years. Some might have thought home equity would help see them through. Sell the home, move into a smaller condo, and have enough money to bank and live on. But with households losing $6.8 trillion, more than half of home equity since end of 2006, these dreams have also been shattered. Because it is a social insurance plan, Social Security provides security not matched by private retirement savings vehicles. There is no investment risk. There is inflation adjustment. Without Social Security benefits, 1 in 2 seniors would be living in poverty. With Social Security benefits, 1 in 10 seniors live in poverty. It's still an amount we ought to wrestle with whether it's appropriate or not for our country to have 10% of the seniors living in poverty. But to think about what the situation would be with 50% of our seniors living in poverty, entirely different. The experiences across generations has changed completely because of the income security provided by Social Security. I remember my grandmother living with my family the last 10 years of her life. Obviously, with her Social Security, she passed away in 1963, and her Social Security check did not have any ability to live independently. It was a very, very meager level of support. That was a common experience across baby boomer families and earlier generations of Americans. One not really seen today at all in the landscape. With Social Security support, the ability to live independent, fulfill lives long into retirement, something never before afforded and made possible because of Social Security. The final slide goes to show the long-term stability of the Social Security benefits relative to the nation's economy. In 1983, contribution rates were increased to pre-fund some of the anticipated benefits of baby boomers in a trust fund that's invested in U.S. government bonds. As Social Security makes these payments, you'll see on this chart a remarkable consistency on Social Security relative to GDP. People will be used to the charts on Medicare, which reflect an open-ended entitlement paying the cost of health care and the cost of health care running out of sight, which sends this right off the chart in terms of spiraling costs. The Social Security outlook is very, very different. Wages are paid through a lifetime of work. Benefits are paid based on the earning incomes, FICA tax, collected through that period of time. And so as a result, the long-term outlook is very stable relative to GDP, and that this particular chart shows where it is over the next 75 years. I believe that we need to have an honest discussion of policy options that address the modest shortfall presently projected in essential benefits. A few years ago, the American public rejected President Bush's plan to take money out of Social Security and put it in private accounts managed by Wall Street. Now, some are talking about taking portions of that plan, dealing with parts of it like they've got a sanitized term called progressive indexing. They would change the inflator index on Social Security, have it track price inflation rather than wage growth. But what really that would accomplish would be the income replacement when my children retire, represented their Social Security benefit, would be entirely different than what our generation enjoys by way of wage replacement under Social Security. Are we comfortable leaving our children with a program providing much less security than the one we inherit from our own parents? American workers, retirees, and families clearly understand that Social Security is their money, and they know that the majority of Americans will need its income replacement when they retire, become disabled, or have spouses, or in my case, parents, pass on. Americans have woven Social Security benefits into the fabric of our families, helping all generations reach independence. It's the heart of the American dream. Social Security builds the future for our middle class, and that is why we wish it happy birthday on August 14th and look forward to the hearing discussion examining the strength of this program. So that opening statement, I appreciate the indulgence of the committee members and members attending this hearing. I would yield to my friend and ranking member, Mr. Johnson. Of course.
Before I begin, yield to the gentlewoman from Florida, Ms. Brownwaite, for a brief comment.
I thank the gentleman very much. I have a hearing, but it's not until 10:30, so I will be here until 10:30. Certainly coming from Florida, as Mr. Klein does, you know, we realize the importance of Social Security and how much of a safety net it has been and needs to continue to be. I know many families today are struggling, and certainly with the economy being what it is, you see more and more seniors actually out there working just to make ends meet. I know at one point my family was a 4-generation family. My daughter was living with me with her son, and my mother was living with me too. And I think that it was out of concern for my mom. But today, with the high cost of living, many families are taking in their mothers, fathers, grandmothers, etc., to help them out. And I think that's part of the great American spirit. And I look forward to hearing the testimony, certainly from you, Mr. Johnson. And with that, I'll yield back the balance of my time.
Thank you.
But around 10:30, I will be leaving.
Let me just say that in August 1953, a message to Congress, President Eisenhower referred to retirement systems as a reflection of the American heritage of sturdy self-reliance, which has made our country strong and kept it free. The self-reliance without which we would have had no Pilgrim Fathers, no hardship-defying pioneers, and no eagerness today to push to ever-widening horizons in every aspect of our national life. He went on to say the Social Security program furnishes on a national scale the opportunity for our citizens through that same self-reliance to build the foundation for their security. During its 75 years, Social Security has provided essential income support to millions of Americans. In May of this year, 43 million seniors and their families received $48 billion in benefits, while 10 million workers with disabilities and their families received $1.5 billion. That said, even in these very difficult economic times, we cannot lose sight of the enduring importance of self-reliance. Social Security benefits were intended to provide a modest income and be supplemented by other savings. None other than FDR said, quote, Social Security can furnish only a base upon which each one of our citizens may build his individual security through his own individual efforts. The 75th anniversary of our Social Security comes at a time when the program is facing serious financial challenges. According to the Congressional Budget Office, or CBO, Social Security will be paying out more in benefits than it will be collecting in taxes this year. By 2016, CBO projects Social Security spending will exceed its tax revenue every year going forward. It's my hope that this anniversary presents an opportunity for us to work on strengthening Social Security's future for all Americans. And while current and near retirees deserve the peace of mind of knowing they will get their promised retirement benefits, we have a responsibility to ensure that Social Security will be there for younger workers also. The simple fact of the matter is the money to pay these benefits has been collected from workers in the form of a payroll tax. Workers who, throughout the life of the program, have been asked to pay more and more and more. In 1935, workers were told the payroll tax would never be greater than 2% on the first $3,000 of earnings. Since then, Congress has passed legislation to increase the tax rate 14 times. Today, the payroll tax is 12.4% on the first $106,800 of earnings, and that amount increases almost every year. Clearly, we've learned that raising taxes or increasing the amount of income tax does not ensure solvency forever. We gotta find a better way forward. Today, 80% of the workers pay in more to Social Security taxes than in income taxes. I want to repeat that. 80% of workers pay more in Social Security tax than in income tax. And for today's young workers, they are paying their hard-earned payroll tax for benefit promises that can't be fully paid. When they will be ready to collect benefits many years from now, no wonder polls show that only 18% of the young people believe that Social Security will be there for them. Americans want, need, and deserve better. We need to look to fair and common sense solutions, and as we do so, it's imperative that we respect the virtue of self-reliance and honor the legacy of hard work that has distinguished our great nation as the land of opportunity. I've long been a champion of empowering Americans with practical retirement security solutions, whether it meant working with then-President Clinton to eliminate the earnings penalty seniors paid if they chose to work in retirement, or advocating phased retirement for older employees who wanted to collect a pension and a paycheck from the same employer in the recent pension reform law. And I've been willing to roll up my sleeves and do what's right for America. Clearly, the time is now when leaders on both sides have expressed a sincere desire to work together to get something done for the sake of our economy and Americans' financial security. Americans are looking to us to rise above politics and work together on a bipartisan basis to find solutions for Social Security's future, but we should do so without raising taxes. We need to start that process today. Yield back.
Thank you, Sam. We'll proceed to our first panel, and that is Ron Klein, Congressman from the state of Florida. Mr. Klein.
I thank the Chairman and Ranking Member Johnson for allowing me to testify before this distinguished subcommittee to commemorate the 75th anniversary of the passage of Social Security. And I acknowledge certainly all the comments that have been made so far about the interest to do something in a bipartisan way and use some common sense in moving forward. Social Security is a contract we have with our seniors, and they have lived up to their end of the bargain. It's essential that we live up to our end, and that's why I'm here to say today that I personally will not stand for any attempts to weaken Social Security benefits for our seniors or any reckless efforts to balance our nation's books on the backs of our senior population. Social Security is arguably the most successful social program ever enacted in the United States, and for good reason. For 75 years now, Social Security has provided working Americans with a dependable level of financial security upon retirement, as well as financial security for millions of disabled Americans, their dependents, and the dependents of deceased workers. Upon its passage in 1935, President Roosevelt said, and I quote, "It is in short a law that will take care of human needs and at the same time provide the United States an economic structure of greater soundness." Close quote. Roosevelt's words still ring true today. For my constituents, Social Security is a benefit of great value, but a benefit they know full well that they have earned after a lifetime of work. Social Security's success is largely based on that very notion. It's an earned benefit that workers paid over a lifetime of their careers. It is different from almost every other federal program in that its activities are financed by a dedicated stream of revenue, and for 75 years now, the program has financed itself without adding to our national deficit. The 22nd Congressional District of Florida, where I represent, is home to many retirees and older Americans. As a matter of fact, over 130,000 senior citizens. And you ask any one of these retirees in my district, and they'll tell you how important Social Security is to them and has been to them over the past few years. Throughout this economic recession, Social Security has been one of the only reliable resources and sources of income for seniors in retirement and at the time when they're facing staggering losses to their retirement plans and the value of their homes. Florida, where we live, is consistently ranked among the top 5 states with the highest foreclosure rates in the country, and these also include senior citizens who lose their homes as well. Coupled with an historic stock market crash that had a major impact on retirement funds, seniors in our state have faced considerable economic uncertainty. I personally believe that benefit cuts are unnecessary and would weaken Social Security in the long run for future generations. And I say this because I believe that some of the suggestions that have been made by some of our colleagues in recent weeks to cut Social Security as a means of reducing our national deficit or pay for wars, I personally find those comments to be irresponsible, short-sighted, and overwhelmingly reckless. And I say that in part because I believe that, again, when you pay into something, you expect that in return back to you. And we should not balance the books of the United States government on the backs of our seniors. I appreciate the opportunity, Mr. Chairman, to work with you and all of our colleagues, Democrat and Republican, in making sure Social Security will be there in the future. And I'm pleased that the members of this subcommittee are giving this issue such careful consideration, and I look forward to working with all of you to ensure that future generations of Americans can rely on Social Security benefits as their parents and grandparents did before them. I yield back, Mr. Chairman. Thank you.
Thank you, Mr. Klein. We appreciate your interest and your testimony to the subcommittee today. I will now move to our second panel. Before we come on up, if you would, we'll get the nameplates in place. Chair would ask unanimous consent that any opening statements submitted by committee members be included in the record in its entirety. Without objection, so ordered. And we would also ask that witnesses' statements be included in the record in their entirety. This is an experienced group of witnesses, so you know we'll have a 5-minute expectation on the length of your presentation, and we look forward to hearing from you. Testifying across this panel, I think we'll just introduce you all now, and then you can walk right down the table as the committee begins. Mr. Lee Hammond, President of the Board at AARP, followed by Ms. Ethel Zelenske, Co-Chair, Social Security Task Force, the Consortium for Citizens with Disabilities. Mr. Kelly Ross, Deputy Police Director, Policy Director, AFL-CIO. My good friend and very distinguished Dr. Sil Schieber, an independent consultant from Newmarket, Maryland. Previously served for many years on the Advisory Committee of Social Security and as its chairman. We also have with us Ms. Virginia Reno, Vice President for Income Security at the National Academy of Social Insurance, and Ms. Nancy Altman, Co-Director of Social Security Works in Bethesda, Maryland. So we have a very distinguished and interesting panel. Let's begin, Mr. Hammond.
Good morning. I'm Lee Hammond, President of AARP, and I'd like to thank Chairman Pomeroy and Ranking Member Johnson for holding this important hearing. AARP greatly appreciates the opportunity to appear before the committee to commemorate and to celebrate Social Security's 75th anniversary and to discuss our thoughts on the important role Social Security plays in the lives of tens of millions of Americans. It may serve us well to remember that what a different America the sun rose over on the morning of August 14th, 1935. In the words of President Roosevelt, 1/3 of the nation was ill-housed, ill-clad, and ill-nourished. Suffering the most on that August morning were our nation's elderly. Nearly half of our older people at that time lived in poverty. Again, in the words of President Roosevelt, men and women who were too old and infirm to work either depended on those who had little to share or spent their remaining years within the walls of a poorhouse. But the winds of change would blow across America at approximately 3:30 that August afternoon when President Roosevelt signed the Social Security Act. On that historic day, with the help of Congress, President Roosevelt began what is arguably the most successful social program in the history of our great nation. Since that day, Social Security has become no less than a bedrock of economic security for countless working Americans and their families. The program is indeed more necessary now than ever, and will be even more necessary tomorrow than it is today. Many Americans believe we need to reduce the deficit so we don't saddle our children and grandchildren with debt that will undermine their health and economic security. But believe me, older Americans, including our members, understand that Social Security did not cause the deficit, and they strongly oppose cutting Social Security benefits to reduce it. In just 6 weeks, over 433,000 people have signed AARP petitions opposing cuts in the Social Security to reduce the deficit. And according to an AARP bulletin survey taken in May 2010, 81% of adults of all ages surveyed, those 18 and over, don't want Congress to cut Social Security to reduce the federal deficit. 71% say they're strongly opposed. It is simply impossible to overestimate the magnitude of Social Security's impact on the lives of American citizens over the past 75 years. In addition to 53 million current beneficiaries, Social Security has, since its inception, allowed millions upon millions of working Americans to live their retirement years independently without fear of exhausting their retirement assets, and as such has kept millions of Americans out of poverty. Companies can go out of business. Pensions can be terminated. The stock market can take a nosedive. Social Security benefits are there in good times and bad. For the majority of retirees, Social Security is the firewall between an old age of dignity and one of financial desperation. It provides more than half of the family income for 61% of single seniors and for 50% of seniors who are married. For about 1 in 4 seniors receiving benefits, it's nearly their only source of income. These benefits put food in the refrigerator. They buy medicine. They help people repair their homes. They pay for air conditioning in the summer and heat in the winter. Social Security benefits help all generations. Social Security has provided a lifeline to millions of Americans who, through sickness or injury, become disabled and can no longer work to support themselves or their families. And the Social Security program has allowed countless widows, widowers, and surviving dependents to make ends meet and continue on financially after the loss of a loved one. Orphans of the September 11 terrorist attacks, families of soldiers killed in Iraq and Afghanistan, children, injured factory workers, widows and widowers all count on Social Security benefits. And yet, as vital as these benefits are for millions of Americans, they are modest by any standard. Social Security was never designed to be a worker's sole source of income for retirement. Today's average worker's retirement benefits will replace only about 4 out of every $10 earned while working. The average retirement benefit in December 2009 was $1,168 a month, about $14,000 a year. The average benefit for retired women was even less, $983 a month, which comes to less than $12,000 a year. Social Security has been running a surplus and has not contributed one dime to our nation's current deficit, because the program cannot spend more than it collects through payroll taxes, the taxation of benefits, and the assets in the trust fund. In fact, for years, Social Security surpluses have masked the true size of the federal deficit. Let me be clear. AARP will fight to ensure that the budget gap is not closed by unfairly targeting cuts in Social Security benefits that today's seniors and future generations have earned over a lifetime of hard work. The strength of Social Security for future generations is, in fact, an issue of very serious concern to our members. They've seen traditional benefits of retirement income, such as defined benefit pensions, savings, and home equity, crumbling like the houses of cards built over the years. Future generations of workers will bear more of the market risks associated with investing their retirement income. Lower-income workers, in particular, are likely to become increasingly reliant on Social Security. So for AARP, ensuring our children, grandchildren, and those who follow are guaranteed adequate financial resources when they retire is critical to finding a fair solution for strengthening Social Security. The promise of Social Security endured for 75 years. It's a promise that I believe embodies our deepest values as Americans, our obligations to one another, our obligations between generations. Can the present system be strengthened to ensure Social Security's promise for future generations? Of course it can. AARP is committed to working with both political parties to help ensure that Social Security remains strong. Let's work together and focus on finding bipartisan and workable solutions to Social Security's long-range solvency problems. Thank you.
Ms. Zelenske.
Chairman Pomeroy, Ranking Member Johnson, and members of the subcommittee, thank you for this opportunity to testify on behalf of the Consortium for Citizens with Disabilities Social Security Task Force. Chairman Pomeroy, I specifically appreciated your comments about receiving survivor's benefits. I too received survivor's benefits as a young child through my college years and understand the importance that it played in my family. The Social Security retirement survivors and disability programs are vitally important to people with disabilities and their families. For disabled workers and their families, Social Security is a very successful insurance program, protecting them against poverty in retirement, in the event of severe disability, and in the event that a wage earner dies in the family. While it did not start at Social Security's inception 75 years ago, efforts to include a disability program began at that time and came to fruition in 1976. Changes over the years have expanded benefits eligibility to dependent disabled workers. No, now it is. I thought my voice was carrying. It wasn't carrying as much as it usually does. At the age of normal retirement age, the benefits of disabled workers convert automatically from disability to retirement insurance and remain at the same level. Their spouses and disabled adult children may also qualify. Other people with disabilities receive retirement benefits if they do not meet the strict rules for disability insurance. Their health may have resulted in intermittent work or caused them to leave the workforce. They earn less, have less opportunity to save, and have a greater need for Social Security retirement. Second, the Survivors Program includes disabled surviving spouses and disabled adult children. And finally, the Disability Program covers disabled workers, their children and spouses, and their disabled adult children. This is the program that most people refer to when they talk about the Disability Program. Social Security has reduced poverty for disabled workers and their families. A majority rely on Social Security benefits as their primary source of income. Yet even with Social Security, the poverty rate among disabled workers and their families is about twice as high as it is for other Social Security beneficiaries. However, it would be much higher without Social Security. In addition, many young workers do not realize that Social Security is available now for them and their families if they become disabled or die. More than 1/3 of young men and nearly 1/3 of young women will either become disabled or die before reaching normal retirement age. There are special rules for younger workers to qualify for disability benefits and for their families to qualify for survivors' benefits. Certain program elements are common across the three programs. The definition of disability is the same formula is used for determining individual benefits, and people can move between programs as life circumstances change. Those receiving disabled adult child benefits are particularly vulnerable to changes in the benefit formula since they may receive benefits from any one of the three programs. They illustrate how interconnected the programs are. They receive benefits when their parent becomes disabled, retires, or dies based on the parent's earnings. The size of the parent's benefit will affect the disabled adult child's income for life. Social Security has a number of critical features that are important to meet the needs of people with disabilities and their families. They include a guaranteed monthly payment, adjusted each year for inflation, and a weighted benefit formula, ensuring that people with the lowest incomes are protected. Because they are affected by changes to any of the three programs, people with disabilities must be considered in evaluating all proposals. We believe that any changes should follow these principles: keep Social Security's current structure based on payroll taxes, preserve Social Security as social insurance, guarantee monthly benefits adjusted for inflation, preserve Social Security to meet the needs of people who are eligible now and in the future, and restore Social Security's long-term financial stability. As it considers proposals in the future, we strongly urge Congress to require a comprehensive analysis of the impact each proposal will have on people who receive Social Security now and in the future. There are many subpopulations of Social Security beneficiaries, and it is essential that Congress understand how each will be affected. We urge Congress to request a beneficiary impact statement on every major proposal it considers. Thank you again for this opportunity to testify.
Thank you for your testimony. Mr. Ross.
Good morning, Chairman Pomeroy and members of the subcommittee. Thank you for giving me this opportunity to present the AFL-CIO's views on the continuing importance of Social Security for seniors, survivors, and persons with disabilities as we approach the 75th anniversary of the Social Security Act. Since 1935, the labor movement has always been one of the strongest supporters of the Social Security program. This morning, I want to make 6 key points about the continuing importance of Social Security, which I discuss in greater detail in my written testimony. First, by any measure, Social Security is a phenomenal success story, arguably the most successful government program in the history of the U.S. Not only has it become the cornerstone of U.S. retirement security, but it also serves as our most effective anti-poverty program and as a bedrock national insurance policy protecting workers and their families against economic catastrophe. Social Security reflects the best in American values and is a model for how we as a society can solve our most intractable problems if we have the courage and the commitment to do so. Second, Social Security has never been more important to more Americans than it is today due to the inexorable rise of retirement insecurity. 2 legs of the 3-legged stool have been hobbled, namely employer-provided pensions and personal savings. Employers are abandoning defined benefit pensions in favor of riskier defined contribution plans, and personal savings have been decimated by the plunge of the stock market and the collapse of the housing bubble. Yet the average Social Security retirement benefit, which for men is little more than what is paid for minimum wage work, and for older women is little more than the poverty level, is not adequate to compensate for this increase in retirement insecurity. What we really should be talking about is enhancing the adequacy of Social Security benefits. Third, misinformation and exaggerated fears about the federal budget deficit are being deployed as the latest weapons in a decades-old campaign to undermine Social Security. Social Security did not cause the current deficit, and it is not a significant contributor to growing deficits over the long term. Simply put, this is a fundamentally dishonest debate being promoted by Wall Street billionaires who have a financial interest in dismantling Social Security and others who have an ideological aversion to social insurance. Fourth, Social Security is now the only sturdy leg of the 3-legged stool, and its finances are fundamentally sound. If Social Security were a private multi-employer pension plan, it would be in the green zone. The trust fund does face a modest shortfall over 75 years, an amount roughly equal to the cost of keeping the Bush tax cuts in place for the richest 1% of taxpayers. But Social Security can be sustained indefinitely with only modest costs for high-income taxpayers and without reducing retirement security for the vast majority of Americans. Moreover, this would be an entirely reasonable approach to the problem, given that high earners have benefited the most by far from the economic policies of recent decades. Fifth, given the growing dependence of workers on their Social Security benefits for retirement security, it would be grossly irresponsible, in the words of the late Robert Ball, to cut Social Security benefits. And make no mistake, proposals to raise the retirement age or reduce annual inflation adjustments or reduce starting benefits are nothing more than benefit cuts. As part of a broad-based coalition, the AFL-CIO stands ready to mobilize our membership to vigorously oppose any proposals that would diminish current Social Security benefits in any way. Social Security benefit cuts should most definitely not be on the table. Finally, the overwhelming majority of Americans want to preserve and strengthen Social Security for themselves and for their children, yet they are bombarded on an almost daily basis with the insistent message that this cannot be done, that the program will not be there for them when they retire. But we can preserve and strengthen Social Security. We simply need to muster the political will to do so and stand up to the Wall Street interests that have been gunning for this program since its inception in 1935. Social Security is a promise made to all generations, and we must not let Wall Street take that promise of retirement security away from the generations that follow us. Thank you.
Thank you, Mr. Ross. Dr. Schreiber.
Good morning, Mr. Chairman. Mr. Johnson, members of the subcommittee, thank you for inviting me here this morning. Over the 75 years that Social Security has existed, many changes to the scope and methods of delivering benefits have been adopted. As time and social needs change, the program needs to change accordingly. Arthur Altman, the first commissioner, had a rotary dial on his desk that could be connected to any other phone in America as long as the copper wires in his phone and the operator switchboards would connect them. Compare that to what's available to Commissioner Astrew today. Think about the phones that he uses, the one he walks around with on his hip, the ones on his desk, and all the other devices that he has available to him. As needs changed, as technology changed, the system changed. From time to time, I believe it is our duty to review all elements of this program to see how they are working, both of fulfilling the goals laid out over the program's history and meeting the needs of modern-day participants in the system. Today, Social Security is an important and substantial foundation of the retirement security for U.S. workers as FDR dreamed that it would be. He had the vision. But the world is quite different. Today, this year, employer-based pensions and profit-sharing plans in the United States will pay out benefits that are roughly the equivalent of 1.25 times the Social Security benefits that will be paid this year. For all practical purposes, in 1935, those did not exist. FDR had the vision, though, that Social Security would act as the foundation upon which we could build. And we have built, and we have had problems with some of the buildings, but we have built, and it's been a much better structure than it's often given credit for. Even those who are quite dependent on the system, though, it provides important protections. And they're delineated in my prepared remarks, and I don't intend to review them here this morning, but there are a couple of issues that I would like to address. First of all, Social Security provides somewhat larger earnings replacement to low-wage workers than to high-wage earners. This redistributive structure is actually an insurance feature of the program that protects workers against bad labor market outcomes. That's what it's all about. If you're not very successful in the labor market, we're going to give you a somewhat higher benefit than somebody who's wildly successful. There is evidence that this feature of the program is not nearly as effective as policymakers have intended over the years, and I believe it should be examined to see if we can't make it more effective. The next item that I would like to address is Franklin Roosevelt's perception about the program that he was creating, that he wanted a retirement savings program to help workers save sufficiently to cover their basic retirement needs. He knew that workers needed a structured program to allow and encourage them to do so. He believed that retirement savings portion of his Social Security program should be funded, that assets needed to be accumulated in parallel to accumulating obligations. He believed this so strongly that he pulled back the original submission of the proposal that was submitted to Congress because it did not include these provisions. He fought time after time legislation rolling back the payroll tax increases because it was a move away from funding. He believed that it was wrong for the Congress in 1935 or 1939 or during the 1940s to run up unfunded obligations that would be left to future Congresses. When he spoke out in 1935, he said that it would be wrong to leave these kinds of unfunded obligations for Congress in 1980. Well, let's roll forward. We're now in 2010. The unfunded liability that FDR said was dishonest, he said it's almost dishonest to do this, to leave future Congresses, Social Security actuaries now estimate has grown to $18.9 trillion. Even looking at the pay-as-you-go unfunded obligation, it's about $5.3 trillion and will likely be more than $6 trillion when the new trustees report comes out. Now, how are we going to pay for this? A colleague and I recently published an analysis, and I can make it available to you. It's referred to in my prepared remarks, where we looked at the burden of the payroll tax, and we looked at the burden not only of paying for Social Security, but also for Medicare, and that the burden that workers face of paying for their own health insurance through their employer situation and saving for their own retirement. And we came to the conclusion as we look to the future, if we weren't careful, we will have reached the high water mark in terms of prosperity of workers, that we can siphon off all of their future productivity gains to pay for these programs. This is not a legacy we want to leave to our children. Our parents left us a legacy that we would be better off than they were, and we owe them the obligation of the opportunity to make themselves better off than we have been because of their own hard work and their own productivity. Some would like to pretend that we could ignore Social Security financing for now. No doubt medical inflation is a greater concern, but to ignore Social Security financing because health costs are out of control would be akin to telling a patient in chemotherapy for cancer we're going to ignore her throat infection because the cancer is really the lethal problem that she's facing. At the outset, I asked you to picture that phone on Arthur Altmaier's desk. The inference was that things have changed since 1935 and Social Security has changed accordingly. But there are areas where it is not. In 1950, less than 40% of the women between 25 and 64 worked outside the home. Today, 3 out of 4 women do. More than half of the women with children preschool age are working outside the home. In light of current work patterns, shouldn't we at least review the spousal benefit and the equity issues that it resolves? Since 1940, we stay in school longer on average and reduce the number of years in our labor because we're starting to work in the labor force later. In addition, in 1940, when benefits were first paid, a typical person was actually not retiring till about 67, but let's say 65. Today, the most frequently claimed age of Social Security benefits is 62. So we've added 3 years to the retirement period because we're claiming earlier now. In addition, we've extended the retirement period by another 5 years because of longevity improvements. Why can't we at least have a civil conversation about whether increasing retirement age is something we should consider in light of these changes since the program got underway, especially if we're going to leave our children a legacy that they're not going to be able to get ahead the way that we have. It may appear that taxing rich people would be the way to solve this issue while affecting as few people as possible. But it would violate much of the philosophical underpinnings that Franklin Roosevelt believed was the foundation of the program that the public would support through time. Taxing people without giving them commensurate benefits would turn the program into what he characterized as the same old dole, welfare. He found it an unacceptable alternative to his vision of what Social Security could be in this country. It is largely a program for the masses in our society, and they need to participate in the adjustment. Because it is such a large part of the current financing problem, the baby boom needs to be included in any consideration of adjustments to the system. I am a member of the baby boom generation. We deserve a candid conversation about appropriate retirement ages in a modern society, the desirability of spousal retirement benefits for those who do not work outside the home, and payroll taxes. Appropriate growth in real purchasing power of initial benefits under the system over time, especially those at the upper end of the earnings distribution, and appropriate levels of minimal benefits for those at low pay levels over long periods of their career. I believe that Franklin Roosevelt would agree with me, if he were here today, that we ought to at least have this conversation. Maybe we would leave things exactly the way they are, but we ought to at least talk about it, given the situation that we face. Thank you very much.
Thank you, Mr. Schieber. Ms. Reno.
Thank you, Chairman Pomeroy and members of the committee. My remarks today will draw on two recent reports on research done by the National Academy of Social Insurance. The first is about a public opinion poll that we did on Americans' attitudes toward Social Security. And another is the report we call Fixing Social Security. It includes both policy options and cost estimates for over 30 ways to improve the financial status of Social Security in the future, and about a dozen ways to improve the adequacy of benefits of the program. I would like to make 6 key points today very quickly. First, Social Security is affordable out in the future. As we saw in the opening slide from Chairman Pomeroy, when you look at it as a share of the entire economy, which is the appropriate way to look at affordability, it's almost a flat line. It's between 5 and 6% of GDP for the next 75 years. Second, benefits are critically important to elders, to children, and to virtually all Americans who rely on income from work, which is virtually all of us. Children in particular have a big stake in Social Security. It lifts 1.3 million children out of poverty. It alleviates poverty of another 1.5 million children. And quite frankly, it is the major source of life insurance for children against the loss of a parent's income because of death. Third, Americans, based on our survey and other surveys that other organizations have done, Americans value Social Security, they want to improve it, and they're willing to pay for it. Our poll found in particular that people say they don't mind paying Social Security taxes because they value it for themselves, they value it for the support it gives to their aging relatives, and they value it because of the support and stability it gives to millions of other people in the United States. These findings were true vast majorities for Republicans, for Democrats, and for independents. I mean, the data show that this is a program that is supported across the board. Fourth, there are many good options for improving the adequacy of benefits where the needs are greatest. There are many targeted options. We discuss many of them in our report. They include low-paid workers, widowed spouses from low-income couples where the couple depended on income of both the husband and wife to make ends meet, and children of deceased workers who in the past were able to get support through college if they had lost parental support. That support is no longer there, and it deserves a new look as we look at the needs for education for our young people in today's competitive economy. My fifth point, history offers good ways to fix Social Security's long-term shortfall. Through most of its 75-year history, Social Security has had a FICA rate increase scheduled somewhere out in the future, but that ended in 1990. We face a shortfall in Social Security about 25 years from now for a particular reason, and that is because we don't yet have a 75-year revenue plan that matches the projections that includes the baby boom retiring and all of us living a little longer. That is, that we have the benefit projection, we don't have the revenue plan to match it. Congress could develop such a revenue plan and adopt it in the next year or so. And in my prepared remarks, I suggest a couple of ways, various ways to do that. A couple of options would broaden the tax base for the Social Security or FICA tax to restore congressional intent from the past. One such change would gradually restore the cap to cover 90% of wages. That's where Congress aimed to get it when they last adjusted that cap in 1977. Another adjustment would be to extend the decision Congress made in 1983 to include 401k contributions as part of the Social Security FICA base. They did that because they didn't want to erode the base for Social Security and Medicare through these voluntary employee contributions. Similar treatment for other kind of employee cash set-asides could help strengthen the finances of both Social Security and Medicare. Finally, if we're looking at a 75-year horizon, it's worth thinking about increasing the FICA rate somewhere out in the future when the money is needed. It doesn't need to be increased now. We don't need the money now, but one could act now to schedule it 12, 20, 40 years from now so that the system stays in balance. My final point is that timely solutions can be enacted now. If we adopted targeted ways to improve benefits and a 75-year financing plan, the next Social Security forecast would show the system is in balance. Americans would be ensured that they can count on the benefits for the next 75 years as we have for the past 70, and we would have done what the American people say they want. In this case, good policy could also be good politics. Thank you, and I'll be happy to answer any questions.
Thank you, Ms. Reno. Ms. Altman.
Thank you. Chairman Pomeroy, Ranking Member Johnson, members of the subcommittee. In this setting, before this subcommittee, celebrating the 75th anniversary of Social Security, it seems fitting to reflect on past congressional champions of Social Security. Claude Pepper, a long-serving, tireless champion of Social Security, an advocate for seniors, the late Speaker of the House, Tip O'Neill, and other past champions understood the vital role Social Security plays in affording some measure of economic security to American workers and their families. They were, and they saw themselves, as the program's vigilant guardians. Having observed them personally, I'm confident that they would have expressed appropriate outrage at some of the rhetoric surrounding Social Security today, just as Representative Klein did here this morning. Recently, for example, some policymakers have argued for cutting Social Security by quoting Willie Sutton, the notorious bank robber, who, when asked why he robbed banks, replied, "Because that's where the money is." The quip presents an unintended but revealing picture. Bank robbers and politicians, all eager to grab the money that hardworking Americans trustingly hand over every payday to what they believe is a safe institution. Similarly, the irreverent tone of some policymakers towards obligations backed by the full faith and credit of the United States and held in trust for American workers and their families, referring to those obligations as IOUs, is a serious disservice to the American people. More fundamentally, the injection of Social Security into the broader deficit debate is almost unprecedented. Past Congresses have worked hard to prevent just that. The Budget Act of 1974 excludes Social Security from budget reconciliation. The funds are segregated in a trust, just as private employers are required to keep their pension funds in trust separate from the general operating funds. In stark contrast, the co-chairs of today's Deficit Commission have publicly stated that Social Security is a central focus of their work. Now, 2 weeks ago, the House approved legislative language that committed it to vote on any Senate-passed recommendations of the Deficit Commission. Notwithstanding that vote, I strongly recommend that this subcommittee insist that any proposals dealing with Social Security be referred here, where the expertise resides. The Commission lacks a single commissioner or even a staff member whose primary area of expertise is Social Security and retirement income, rather than the budget. More fundamentally, throughout Social Security's long history, Congress has always relied on the regular order when considering Social Security, including in 1977 and 1983, when Social Security faced a more immediate and much larger deficit than the one projected today. An issue as important and far-reaching as Social Security demands, as a procedural matter, deliberate, thorough consideration in the sunshine, with hearings, open markups, full debate, and opportunity for amendment, as it has always happened over 75 years. As a substantive matter, I urge the members of this body to follow the will of the people. There's much polarization in the country today, But Social Security is an issue where the people are united. The polarization comes between the people on the one hand and much of the policy and media elites on the other, who have somehow been convinced by a select group of experts that Social Security should be scaled back. This is not necessary. The proposal that seems to have the most traction at the moment in Washington is increasing the retirement age, which, as this chart on the last page of my testimony reveals and illustrates, is a substantial across-the-benefit cut for retirees. This is not what the American people want. Poll after poll, including the NASI poll that Ms. Reno just spoke of, indicates that the American people, but there are many other polls that come out the same way, the American people, by overwhelming percentages, support Social Security, believe its benefits, if anything, are too low, and want its projected deficit closed by increasing taxes, ideally progressively, not by cutting benefits. And they do not want Social Security mixed in with overall deficit discussions. These are the views held by Democrats, independents, Republicans, union households, Tea Partiers, the young, the old, and every other demographic and age group you can divide the poll into. I believe, as others at this hearing have also said, that the preference of the American people is also the best policy. In closing, I applaud the chairman of this subcommittee and urge everyone in Congress to follow the lead, as he is doing, of those who've come before. I urge you to reject the conventional wisdom here in Washington. I further urge you to continue to demonstrate to the American people that you understand Social Security's importance. And then after you show that you understand, proceed to follow their will and their wisdom. Thank you.
Thank you. That was right across the panel. Excellent testimony. We'll begin with questions. I'm very pleased with the interest and participation of so many of my colleagues in this hearings. So I'll forego questions to get other members' questions in as quickly as possible. Under the Gibbons rule, Ms. Schwartz, you are first up.
Well, thank you, Mr. Chairman, and thank you for holding this hearing. Seems to me the right place to start is to acknowledge 75 years of success and support for Social Security. I think it is, we've had, and we'll continue to have political debates about this, but as the panel pointed out, and of course, the chairman and the ranking member pointed out, there is enormous both understanding and support about Social Security and the importance it has had for Americans. And I think that is the appropriate starting point for the discussion we have about Social Security. And some of the facts, I think we should probably keep this chart up in terms of the Social Security benefits. That average Social Security retirement benefit is $14,000 a year. And I actually have to say the median income of senior households, not senior individuals, but senior households, so I assume this is two couples, a couple, husband and wife, and is $24,000 a year. That is certainly a modest income, and something that we have to understand that 6 in 10 seniors rely on Social Security. 6 in 10 seniors. And I have to say that certainly their children and their relatives and really understand this. And unfortunately, the rhetoric around Social Security has suggested that it won't be there for future generations. And as you point out, that's simply not true. We need to make some adjustments potentially as we go forward, but going out 75 years for most of us is a pretty long time. So we need to build on the history and the understanding of the importance of Social Security. And I think, as Representative Ron Klein pointed out earlier, and I think you see the interest on, at least on this side of I guess the aisle, except we don't really have an aisle here, but is that we understand this, and we represent so many seniors and those who are on disability, and of course for minors as well, who have counted on this. I think someone pointed out that this is life insurance for so many children in this country. I think, Ms. Reno, you pointed that out. I don't think that too many Americans necessarily understand that unless you've been hit by it personally, and we may all know someone who has. So really, I think my understanding is that there will be a future hearing about some of the alternatives that have been suggested, at least more broadly speaking. And I just wanted to ask in a general way, because I don't think this is the time to get into real specifics about the alternatives, but it has certainly been suggested by the Republican leader that we seriously cut Social Security, and it's been suggested by the ranking member on budget that we actually dismantle and change Social Security to a privatized system. I think for many of us, following the economic near collapse, the financial difficulty that we've been in, we have seen 401ks and IRAs lose 30% of their value. I think the chairman pointed out that for many of us who know friends or colleagues who say, I'm not retiring, I simply can't, because we are seeing really the almost the end, not quite, to defined benefits in terms of retirement. I've been someone who says very clearly that we cannot, as Americans, by and large, rely on Social Security alone. That is not what any of us are suggesting. It has been enormously successful in keeping seniors out of poverty. That's extremely important. It is important to all seniors as either the majority of their income or as a supplement to help keep them afloat. But I wanted to see particularly the response from, I guess, our last two, those who commented on this, Ms. Reno and Ms. Altman, about the American people's understanding of Social Security and their reaction to the possibility of, that has been suggested by the Republican side of the aisle, that we privatize Social Security, that we rely on Wall Street and to get benefits back as for future seniors. That has been certainly suggested by Mr. Ryan. And that Mr. Boehner has suggested that we, in fact, cut benefits, that we means test higher income beneficiaries, and that we raise the retirement age, and that we cut Social Security in order to pay for the war in Afghanistan. Others have suggested we do it for the deficit. We have protected Social Security in a separate trust fund. We have planned for the baby boomers. We didn't do that in Medicare. That's a bigger issue, but we planned for it. Good work by my predecessors in understanding what we'd be faced with in terms of the many more beneficiaries. But if I really just briefly, if both Ms. Reno and Ms. Altman could speak to what the reaction of not just our current seniors, who obviously understand it mostly, but for younger workers who have been told not to rely on Social Security, but truthfully no one should rely solely on Social Security if they can help it, if they've been working. Other retirement savings are important. But what would the reaction be if we, in fact, cut benefits and raise the retirement age and, really also privatized, as Mr. Ryan has suggested, for future retirees, ending Social Security and its incredible record of success over 75 years.
I've tried to be a little lenient on time, but I do want to get everyone's questions in. So I think brief reactions. I want within 1 minute to get the comments of the two of you, and then we'll go to the other.
And again, I understand, and thanks for the Chairman's indulgence, that we will spend more time on the specifics here, but the general sense of would be helpful. Thank you, Mr. Chairman.
Just very quickly, in terms of what we know from opinion polls, and I've researched them over the years, Americans strongly support Social Security. They have over the years. It is true that there is lack of confidence that the benefits will be there in the future, but that has also been true for a couple of decades. It has not eroded support for the system. Young, middle-aged, and old people all believe it's important to preserve and improve the benefits.
Our organization just completed a poll on Social Security, and we asked a number of questions and found strong opposition to cutting benefits, to raising the retirement age and these indexing proposals and so forth. Strong support for raising the cap. Strong support also for doing some things that the late Bob Ball suggested, freezing the estate tax 2009 level, dedicating it to Social Security, which takes care of about a quarter of the shortfall. Putting in a financial transactions tax the way they have in the UK, dedicating that to Social Security, that got support. That would actually put the program in surplus, and you could raise benefits if you did that. So, when you ask what the reaction would be if Congress did raise the retirement age to 70 or did some of these other things, I hate to say this, but that disturbing story on Tuesday, where in the Washington Post, that showed that 7 out of 10 Americans do not think that have confidence that Congress will make the right decisions for them, I think this would go right in line with that. They'd be saying, wait, we're telling you how to fix it. Why aren't you listening to us?
Thank you. Mr. Riker.
Well, thank you, Mr. Chairman. Thank you, Ranking Member. Surprised I'm this soon up, but just a couple of questions.
Are you ready? I can.
Fake it. Just a question for Dr. Schieber. So I have a constituent question. Sandy from Renton, Washington, writes in. She's 69 and a half years old. She's concerned with the taxation of Social Security benefits when her income exceeds a certain level as a result of withdrawing funds from her IRA. Not only does this tax penalize savings, as you know, but since the thresholds for taxation of benefits are not indexed, more and more seniors are being hit every year. So wouldn't you finding ways to reduce, or looking at finding ways to reduce or remove this tax to help improve savings and protect benefits?
You know, one of the problems, I guess this all reminds me of Senator Russell Long, who, as chairman of the Senate Finance Committee, used to talk about his favorite approach to tax policy, his theory of tax policy. We won't tax you and we won't tax me, we'll tax the guy behind the tree. The problem is that there's never anybody behind the tree. You know, we just heard here a whole litany of new taxes we can introduce that will put money in the Social Security Trust Fund if that's where we dedicate it, and shoot, we could even expand benefits right now. And then on the other hand, we've now got somebody who's being faced with a tax, who doesn't want to pay it, and says, you know, can we avoid it? When you look at the tax treatment of pensions, regular pensions in the United States, to the extent it's a contributory pension where pre-tax dollars are being put into the pension, that benefits are then dispersed until the point where you have gotten the return of your contribution, and that's not taxed, but all other benefits are taxed beyond that. If we treated Social Security like that, then your constituent and other recipients of Social Security would get back the equivalent of their own contributions to Social Security on a nominal basis, and everything over and above that would be taxable. So if we want consistent tax policy, then we're going to have to deal with some of the aggravation that people have, and of course vest on you, that they've got to pay these taxes, and these taxes seem unfair. Well, they are unfair. They're unfair to everybody but the guy behind the tree. And the problem is there's nobody back there. You know, we got to tax you and we got to tax me, or we can't do any of this.
Well, thank you for taxing me. I'm happy to help. Does anybody else have a response to that question or no? It's a good answer. Mr. Hammond, question. The Disability Insurance Trust Fund has been paying out more in benefits than it's received in cash revenues in 2010 or 25. According to the 209 trustees report, the Disability Insurance Trust Fund will reach a zero balance in 2020. In the past, Congress has temporarily increased the portion of the payroll tax paid to the Disability Insurance Trust Fund, while at the same time reducing the portion paid to the Old Age Survivors Insurance Trust Fund. What's AARP's position on this?
I'm not prepared to answer that question this morning. I didn't come with those facts available, but I'll certainly have our staff members get back to you with that information.
Okay, I appreciate it. Thank you. Mr. Chairman, now you back.
Thank you. Mr. Becerra.
Thank you, Mr. Chairman, and thank you to each and every one of you for your testimony. Trying to respect the chairman's wish to have us move forward, I'm going to, rather than pose questions as I was expecting to, let me just ask you to raise your hand for me. I'll try to ask a straightforward question, agree or disagree with me. And actually, some of this you've already touched on. And again, thank you very much for your insights on this. First question or comment. 13 recessions have taken place since the Great Depression of the 1930s. And as far as I know, never once has Social Security failed to pay benefits to its recipients. Does anyone disagree with that?
No.
By the way, I think it was Mr. Hammond who mentioned that during the Great Recession of 2007, 2008, Americans lost about $3 trillion of their wealth in their private retirement accounts, 401ks, IRAs. During that same 2-year period of this Great Recession, Americans lost about $13 trillion of their wealth, depreciation of their home or loss of their home, loss of their job, therefore their income. Everything we own, about $13 trillion worth of what we have as wealth disappeared during this Great Recession. That's important to note because you know what the size of the national debt is? 13 trillion. So what took 230 some odd years to build this national debt, in 2 years of a Great Recession, we lost that same amount of money. That's how difficult this recession has been. Another question or comment here, agree or disagree. Social Security cannot borrow money to pay recipient benefits and thus must fix itself whenever it's got a shortfall. So it must fix itself from within in order to be able to pay any recipient benefits. Anyone disagree with that?
Point of clarification. Okay. Is that a legal question?
I guess a legal question.
Yeah, fine. I agree with
you agree, right? So essentially, and in case someone doesn't agree, I would refer them to Section 710 of the Social Security Act, which says you can't borrow money, essentially, to pay benefits. So we always have to make sure that Social Security is fiscally responsible. Given that, so the question is, does anyone here believe that Social Security has led to any part of the existing federal budget deficits or today's national debt? Anyone believe that it has added money to the national debt or deficit? Okay. Does anyone believe that Social Security, given that it didn't contribute to these deficits or to any single cent of the nation's $13 trillion debt, does anyone here believe that Social Security funds or cuts or savings to Social Security that might be proposed should be used to help pay for today's deficits or national debt? Anyone here believe you should? Okay, so keep Social Security money for Social Security. Okay. Someone also mentioned that Social Security is more than just a retirement benefit. In fact, I think more than one of you did. The Social Security system provides disability benefit, it was mentioned, and it also acts as a life insurance policy for a worker in America who happens to perish. My understanding is that the value of those 2 additional benefits that Social Security provides to Americans, beyond helping you in your retirement, amount to about a $500,000 disability policy and a $500,000 life insurance policy for a young worker, someone late 20s with a small family, couple of kids. Does anyone know if of any retirement plan policy, private sector retirement plan policy, that also offers disability insurance on top of that and life insurance on top of that?
Yes.
So,
yes.
Yeah.
They exist.
well,
Okay.
they do exist, but they're defined benefit plans, and of course, defined benefit plans are being frozen and terminated in place and replaced with 401ks.
And let me ask one last question. On some of these plans, do we know of any of these plans that are guaranteed for the life of the recipient until you die?
ERISA plans, theoretically, defined benefit plans, are guaranteed, at least a portion of the benefit is guaranteed for the life of the participant.
And I think that's the value of defined benefit plans versus defined contribution plans, which are 401ks and IRAs, because they have some protections. But even then, we just passed legislation here in the House that tries to help shore up some of these defined benefit plans, because a lot of companies, for whatever reasons, don't seem to have the monies that they needed to make sure that they could pay out those benefits. So while we had this chaos in the entire Great Recession, where Americans were losing the value of their retirement savings, they were losing their own wealth, there wasn't one day when Social Security did not pay benefits as was promised, to each and every one of the 53 million Americans who are receiving benefits. By the way, over 2,000 of those beneficiaries, we don't often recognize this, over 2,000 of those beneficiaries happen to be children who lost their parents during the 9/11 strike in New York City. And we often forget that it's more than just seniors who are receiving Social Security benefits. So thank you for your help. I've run out of time, and I want to respect the Chairman's admonition. So, Chairman, I yield back the balance of my time.
Thank you. Mr. Doggett.
Thank you, Mr. Chairman, and thank you for holding this important hearing. There is every reason, of course, to celebrate the 75th anniversary of Social Security, but unfortunately, resistance from some elements of the Republican Party to Social Security has lasted longer than 75 years. And it continues to this day. It just changes form and tactics. We know, as reflected very well in the title of your book, Ms. Altman, that until this Congress, the latest major challenge that Social Security faced was George Bush's attempt to privatize it. He said he was going to use his political capital to privatize it. Fortunately, we were able to overcome those efforts, but now we face other great challenges from those who promote myths that our country cannot afford to continue its commitment to Social Security, or the suggestion that Social Security will simply not be there not only for grandchildren as well as grandparents. And certainly I think that must be one of our goals, to assure that our grandchildren have the same protection we want for our grandparents today. Let me ask you first, Ms. Altman, about some of this mythology that is being promoted. One of the major efforts of the Bush administration and those who continue to adhere to that philosophy that only private plans work, and I think maybe some of the resistance that they have had for over 75 years to Social Security, is that Social Security works so well and it operates so efficiently that it is perhaps the best example that totally conflicts with their ideology that government can never do anything effectively. And that's why they despise it so much. But one of the examples that they use is the suggestion that, you know, there's no guarantee you'll get this Social Security money. The government is spending all that money that's in Social Security. And you referenced in your original testimony that what we do in government with money that is paid in with Social Security with a trust fund is no different than what a private company does with its retirement plans. Could you elaborate on that?
Absolutely. And I think you've made a number of very important points, and it fits with some of the points Representative Becerra was saying as well, that the federal government, the Social Security system returns more than 99 cents of every dollar collected in benefits that it collects in contributions. It returns more than 99 cents in benefits. It's extremely efficient, with administrative costs over 1%. The reason it can be so efficient is that it is a universal risk pool. It covers the entire nation. There's no free riders or adverse selection. It has all the strengths of private sector defined benefit plans, but it's universal and portable. And those are some of the problems you get in with, and it's also backed by the government. So it's much more secure. In terms of the funds, since the beginning, since Social Security was created, it's had, from the beginning, two main sources of income. The main source of income were worker contributions, which I note the statute was called the Federal Insurance Contributions Act. These are insurance contributions that workers pay. Any that was not needed, the surplus of contributions over costs of the program, were invested. But because Congress wanted to be particularly safe and secure and because of the trust of the American people, they were taking American workers' money for American workers and their family. They required that those investments be placed in the safest investment on earth, Treasury bonds backed by the full faith and credit of the United States.
Indeed, so many private plans who want to assure maximum security, instead of investing in some Wall Street bank that might need to be bailed out, certainly over my objection, but they will put it into a Treasury bond, the very kind of security that Social Security relies on.
Absolutely. The entire world at this moment, concerned about the volatility in the markets all over the world, are investing in U.S. Treasuries, which is why the rates are so low now. And that's all that's going on. There's nothing magic about it. It's an insurer. Social Security is an insurer. It provides insurance. Like any responsible insurer, it has a reserve. It maintains a reserve. And that reserve, like any responsible insurer, is invested. And most insurers would diversify their portfolio and put some in stocks, but Social Securities remains in bonds.
Thank you. Ms. Zelenske, I was particularly interested in your comment that we need a beneficiary impact statement before we accept the advice of some know-it-all expert who's not living with a person with disabilities, who's relying on disability income, who's not a child who must rely on the survivor insurance program, or who is not a senior who is relying on Social Security for the majority of their income. And I think that's something we need to do. And finally, mindful of the time, I just want to say to Mr. Hammond how important I think it is the role that AARP has played in getting our health insurance reform measure passed. And I thank you for the information you've been getting out to seniors. They have heard so much mythology, so many of the same kind of attacks that are being made to try to undermine, weaken, and reduce Social Security have been launched against this health insurance reform, which has strengthened Medicare and extended its solvency for more than another decade. And thank you for getting out objective information. I tell people you don't have to believe the Democrats or the Republicans. Turn to groups like AARP and the American Cancer Society Action Network for objective information about healthcare reform and what it means. And I can see you're going to continue to play an active role in protecting and preserving and strengthening Social Security. Thank you all.
Thank the gentleman. I think we have time for at least one additional inquiry. Ms. Sanchez.
Thank you, Mr. Chairman. And I want to really commend you for calling this important hearing on behalf of Social Security recipients nationwide. I'm going to jump quickly into questions because we have been called for votes across the street. And I want to start with Mr. Hammond. I have about 50,000 Social Security beneficiaries in my district who are age 65 or older, and about 8,000 who receive Social Security disability benefits. And they understand that Social Security isn't some welfare program. They understand that it's something that they've earned. An American worker pays into the system with the understanding that they will then receive the benefit once they retire or if they become disabled. Don't you think that it sends a bad message to seniors to default on our obligation to them by cutting the benefits that they were promised and when they knew that those benefits would be available as they paid in to the system while they were working?
I would certainly agree with you that it does send a very bad message to seniors, age 65 and over, who are on Social Security. In most cases, the kinds of corrections that have been done have taken into consideration where people were in the retirement process. But given that, the modest benefits that we currently have in Social Security really can't afford to be cut. We are actually then putting people further into poverty, or more people into the poverty level than we currently have. So, you know, I think that's correct, but not only for seniors who are on Social Security, but for future generations as well.
Certainly, and I just want to make the point that, you know, when members of Congress up here talk about a 10% or a 20% cut in benefits, it doesn't sound like much, but to somebody who's receiving a $1,000 a month benefit, you know, that's a $100 cut or a $200 cut. That's a lot of money in terms of their ability to survive and meet their monthly obligations. So it's very easy in the theoretical to say, oh, this could be a small correction, but to the people who are receiving the benefit, it's of tremendous, tremendous impact to them. Mr. Ross, something that I want to bring up, there's been a lot of propping up of, or kudos, I should say today, for the defined benefit pension plans. How common are defined benefit pension plans in this country? Because I get the impression that they're basically an endangered species.
They are.
And even when there are defined benefit pension plans, something as simple as a corporate bankruptcy can have a huge impact on the money that folks have been saving and putting away towards their retirement through a defined benefit pension plan. And so my understanding is that most people that I talk to in my district, and probably a lot of your members, I'm interested in hearing your perspective, really believe that even if they have a defined benefit pension plan, that a Social Security benefit is really the only pension plan that they can have faith and trust is going to be there when they really need it.
Yeah, certainly the defined benefit pension system is in serious trouble. 68% of private sector union workers have a defined benefit pension. I think including public sector workers, it's closer to 80%. But there's a very stark contrast between the union world and the non-union world. There's only 16% of non-union workers have a defined benefit pension plan, so the average overall is 21%, but they're definitely on the decline. And that's another reason why Social Security is so important for people. And when we're talking about taking away yet another leg of the three-legged stool, it doesn't make any sense for people who are averaging $14,000 in annual benefits. That's not where the solution lies.
So it's sort of disingenuous to say, well, you know, we can cut Social Security benefits or make modifications because, you know, people have defined benefit pension plans when, in fact, defined benefit pension plans are not the norm for most American workers.
20% or less on average overall, and that's declining. So I think people looking forward to the future will not be able to count even on that amount.
Thank you. And I also want to address something with respect to these proposals that have been tossed around. Republican leader Boehner has mentioned possibly raising the retirement age. And I want to ask you, you know, unions represent folks across all different kinds of sectors. Would raising the retirement age to 70 for a dock worker or a construction worker be the same as raising the retirement age for, say, an attorney or an accountant?
Absolutely not, and this is something that I know President Trump feels very, very strongly about, coming from the mine workers. You know, people who are making these proposals don't seem to have been around anyone who has had a hard job with physical labor during their lifetime, because they realize that you can't, if you have that kind of a job, you can't work until you're in your 70s.
Thank you.
Thank you, Mr. Chairman.
Look, I got to confess, I missed the call. Mr. Johnson should have gone next. We have time to get Mr. Johnson's question in before we go over to vote. Mr. Johnson.
Thanks, Mr. Chairman. I'd just like to straighten out one of the comments that's been made here. You know, it's not the Bush administration only, because Clinton also asked for voluntary personal accounts, and both those administrations thought that it would strengthen Social Security finance and improve the government's bottom line and give younger workers the entitlement to higher benefits, so which would solve some of the problems she just talked about. Dr. Schieber, why was 65 chosen as a retirement age when Social Security began?
It was kind of a random number, actually. The enlightenment on that comes from one of the members of the Committee on Economic Security, J. Douglas Brown. He was a professor, I believe, at Princeton. And he worked on the design of the program, and late in his life, he actually did an oral interview with the historian at the Social Security Administration, and the historian was asking, so there's a variety of these kinds of things, $3,000, age 65, this and that. How did you arrive at these? And he says, well, we used aesthetic logic. And yeah, that's kind of what the historian did. He kind of chuckled. He says, aesthetic logic, what is that? I've never heard of it. He said, well, it looked right. He says, you know, 63 wouldn't have looked right. 67 wouldn't have looked right. 65 looked right. And so we picked 65, and that's why it was 65.
Well, you, in your testimony, note that over time workers are spending less years working and more years in retirement.
Right.
So how much of a role does that early retirement age of 62 play in this?
Well, 62 is a contributor, because it kind of establishes a mindset on significant portions of the workforce that, you know, this is when I'm going to bail out. Now, if that was raised to 63, you would see that some of those people would stick around in the workforce a year longer. They would contribute additional taxes. Now, depending on how benefits get adjusted overall, it may not be a long-term savings for Social Security, because if benefits simply go up because they've worked a year longer, then there would be no benefit to Social Security. But there would be a tremendous dividend to society, including general revenues, because people are working a year longer. The output that they produce would be available to the society. I mean, that's our real wealth at any point in time. We can talk about what houses are worth, or even what George Bush's political capital was. We tend to overestimate capital values, many of us, on a pretty regular basis. What the market says they're worth. And so, you know, our real wealth here is the goods and services we can produce for ourselves in the long term. And keeping people at work a bit longer would produce more goods and services. Doesn't mean that we shouldn't be very concerned about the mine workers. And maybe the mine workers can't work until they're 70, certainly, or maybe even 65, or maybe even 62. Maybe we need to start kind of thinking about the economy we have and make this a program that fits our needs, and not always go to the lowest common denominator.
I hear you. Since the beginning of the program, there's been a cap on earnings starting at $3,000. Would you tell us the history behind how that number was chosen?
Well, that was another one of the aesthetic logic matters, and that gets caught up in some of the modern day discussion. I think we heard here today that we want to get back to taxing 90% of earnings under the payroll tax cap. You know, that was never a stipulated goal that was set in the beginning of the program. It was a goal that one of the Congresses made when they were considering, I think it was the 77 amendments. They said, let's get that to 90%. But that number's been higher or lower than it is today in the past. So that was just a number that was, again, chosen that seemed to make the program financing work, at least for the period of considering the legislation. They knew there were going to be changes.
Yep, and if 90% of the wages were covered by Social Security today, the wage cap currently $106,800 would be $181,200.
Correct.
Yeah, would you agree that this would amount to a major tax increase for people making less than $250,000?
It would certainly be a major tax increase for the people affected. I mean, it's a 7% tax on the individual, or 6.2%. Plus, there's kind of this hidden part of the iceberg, the 6.2 that the employer pays, which is really kind of part of the burden of hiring that worker. The worker really pays both ends of this payroll tax. So yeah, anybody getting hit with a 14% increase in their tax on a portion of their income, most of them would probably say, "Ouch." This stings. It does hurt. Yeah.
Thank you, sir. Thank you, Mr. Chairman.
Thank you, Mr. Johnson. Mr. Crowley, I believe, is on his way back from the floor. There's one vote. I intend to go and return back from the floor, so if you'll stand at ease, I authorize Mr. Crowley in his absence, when he's here, to reconvene the hearing for purpose of getting his question in, and I'll be back as soon as I can travel over there and back. It's only one vote. Thank you. All right, we'll reconvene the hearing. I thought Mr. Crowley could reconvene it all on his own, but in any event, wanted to get back before he claimed the gavel under the doctrine of adverse possession. Mr. Crowley.
I was powerless. I was like a victim here, waiting and waiting. But thank you, Mr. Chairman, and thank you for holding this hearing today on the celebration of the 75th anniversary of, I think, one of the hallmarks of our country, that is Social Security. Just a quick story for you, and I can't help this because I think we can all relate to, I think, what we're discussing here a little better as we personalize it. We all have our own personal stories, but I come from a very large Irish Catholic family from Queens, New York, and my father was one of 7 children. One brother became a priest, his sister became a nun, 5 other children went on to have large families. Ours was the smallest of those families, only 4 in our family. But my father worked up until the day he died on December 27th of 2000, and he died at 70 years of age. It's the same year, I believe, which this Congress changed the law to allow people to continue to work and receive their Social Security after 65. My dad got about 6 months of Social Security payments, I think, between the day we signed it, that was signed into law, and until the day he died. He started work at age 12 at an A&P up in Maspeth, Queens on 69th Street. Many of my constituents would have known it's now a beer distributor, lumping or humping 100-pound sacks of potatoes during the war up and down from the basement up to where it was sold. And that story is not unlike, I think, a lot of people who had led similar lives, worked very hard. My dad died at 70 as an attorney, having worked for many years as a police officer before that and a number of other jobs along the way, just like so many other people in our country have done as well. My father never, ever regretted, though, the notion of Social Security. He only got, as I said, a number of years benefit from it. He always knew that my mother would somehow benefit from it, that we as a family would benefit. He knew that his sister, whose husband was killed in an automobile accident, who left 7 children, one was killed with him, 7 children behind, all 7 of whom were under 18 years of age, that family, his sister's family, benefited from that. So he saw the beauty of Social Security beyond oneself and how we contribute in the hopes that we get back for ourselves what we put in. That's for it's for all of us and not just for the one individual who is contributing to that. And I think that's what's so unique and special about Social Security. Mr. Schreiber, I'm not parsing on particularly on you per se, but I think generally speaking, much of what I gathered from your testimony in terms of the relevance between low-wage workers relative to their pre-retirement earnings to high-wage earners. People who make more money don't need Social Security to the same degree that people who make less and in many respects more menial jobs in order to derive an income. And this is not about you, but much of what I heard you saying reminds me of this great sucking sound of people leeching off of a system at the expense of others.
Wait. Can I clarify?
I haven't finished my comments yet.
Okay, I'm sorry.
I just think that we have to look at this in a totality, that it's not just about an individual, what we contribute towards taxes, what we do for everyone. And my father wasn't a bleeding liberal, let me tell you. By any respects, he was old school and worked very hard for everything he did, but he was a true believer that Social Security advanced our society, allowed for people who never had the opportunity to send their kids to college to not only worry about retirement, although it's still important about retirement, they could look to put more money aside so that children can benefit and go to colleges that they never dreamed they could ever afford, or go to a high school that they never ever dreamed they could afford to send their children to. So I think it goes well beyond maybe even what it was meant to do in the first place, and that would be a leg of retirement for individuals, for their families. I do want to set the record straight, though. I think Mr. Johnson had alluded to President Clinton, an attempt by President Clinton to privatize Social Security. President Clinton's idea of the USA accounts would not have privatized Social Security. It would not have invaded or raided the Social Security Trust Fund, and it did not take a single dollar away from, would not have taken a single dollar away from Social Security. In fact, Bill Clinton left our country with a multi-trillion-dollar surplus that strengthened and did not weaken Social Security as we know it today. I do know, I have very limited time, so I do know that Social Security has a surplus in the Social Security Trust Fund worth $2.6 trillion, backed up by the Treasury bonds and backed up by the full faith and confidence of the credit of the United States. I just want to turn my attention to Mr. Ross very quickly, if I could. Life cycle funds are private retirement investment vehicles offered in the private sector marketplace that people can use to save for their retirement outside of the Social Security system. They are supposed to protect investors by placing the money in safer investments as a person's savings, as the person savings and the person ages out. During the most recent economic crisis, did these private life cycle funds maintain their value, or did many retirees and those workers close to retirement see their nest eggs dry up? I have very limited time, so I'm just going to, if I could, just focus on it. But aren't life cycle funds like, so they lost value, did they not?
Microphone.
But aren't life cycle funds like this, like I just spoke about, the backbone of any Social Security privatization plan being pushed by my Republican colleagues? Did the Social Security benefits for retirees decrease because of the recession, or did they remain constant?
Absolutely not. They remain constant.
If we had privatized Social Security in 2005, as many of my Republican colleagues in Congress wanted to, and still want to, would seniors and retirees' incomes have stayed constant, or would their savings would they have taken a drastic hit? And if so, how drastic?
I think the plunge in the stock market is a very solid evidence that that was a misguided proposal.
Thank you for your comments, and I yield back the balance of my time.
Thank you. I have just a couple of questions and get into it. First, Mr. Schreiber, did you want to respond to some of the
I did. I think there was a mischaracterization of my position. I believe strongly in the redistributive characteristics of Social Security. It's been there from day one. I believe it makes eminent sense in a program like this. I think that it is not doing as much as Congress actually, and Roosevelt and the Committee on Economic Security actually intended because of some other features of the program. I think that deserves special scrutiny because I think that benefit needs to be enhanced. If we have individuals in our society who go out day in and day out over a very long career, and they end up at the end of their career with a Social Security benefit that's not at least the equivalent of poverty, I think that's wrong. Somebody that's worked their tail off for years and years and years ought to get at least a poverty level benefit. I believe that. I believe it fundamentally. And so I just want everybody to understand that what I think was a characterization here is not appropriate and actually quite unfair.
I heard you say in your testimony that you felt that the redistributive feature could be enhanced.
Correct. Correct.
Mr. Brady.
Thank you, Mr. Chairman. I'm sorry I had to step away. You know, it's been said that only modest adjustments need to be made to preserve Social Security once and for all. Can I ask each of the panelists what modest adjustments they would support to preserve Social Security? Mr. Hammond?
Mr. Brady, there are many options now on the table. I think they all need discussion. We're not supporting any particular option at this point for any solvency issue.
Can I ask why? I mean, it seems to me AARP has played a key role in all discussions in Social Security. You would think if anyone would have a plan, it would be y'all.
Sir, I would agree with you that we have played a key part in Social Security, but we're interested in hearing all of the options that are there. We're interested in some transparent discussion nationwide about the issues and the possible solutions. We're not offering a plan for solvency.
That's regrettable. I think you really have a responsibility to do that. and especially given your members' concerns about this issue. Ms. Zelenske, do you have, what modest adjustments would you support?
My response is similar to Mr. Hammond's. And our task force at CCD hasn't taken position on specific options, and we've looked at the list, for instance, that the National Academy on Socials Insurance has put together, different ways that you can piece together ways to bridge the gap in the long-term solvency. But you know, the one approach that we have been pushing is the need to do a beneficiary impact statement, which is I went into in more detail in my written statement.
No, I do. I appreciate it. Thank you. Mr. Ross?
Clearly, we are on record supporting the increase in the cap on taxable wages to 90%. I think there may be other proposals on the revenue side that we would support, but we're willing to discuss those. The CBO just recently came out with a report on various options, suggesting various revenue proposals that would close the gap.
Okay. Raising the cap gets us a little way toward it, but you don't have any other.
That's what we're on record, but I would just point out in the CBO report, it shows that eliminating the taxable maximum does close the gap.
Will the AFL-CIO be bringing a plan to preserve Social Security forward?
I'm not sure about that. It's under discussion.
My point is not to hammer y'all for it. I just think we all know what's on the menu. We want to know what items you're choosing to help us preserve Social Security, because there are impacts to all of them, consequences to all of them. And I think because all of you have had huge interest, long-term interests, and knowledgeable on this issue, we really do want to know, what are your recommendations on this? Dr. Schieber?
There are a number of things that I think I point out in my prepared remarks that were submitted for the record, where I think things need to be looked at. Probably one of the most prominent ones that I suggested here we ought to be looking at is the appropriate retirement age.
Sure.
And maybe the appropriate retirement age is not a universal retirement age in this society where some of our work is becoming bifurcated. We do still have people out there on the wrong end of the shovel. But we've got a lot of other people who are sitting at keyboards and doing other things where maybe they could be expected to work a bit longer without it necessarily creating undue sacrifice. So maybe we need to look at that.
Well, we're in Congress. Some people don't think we work at all. So
well, there's
don't go there, Ms. Reno.
I was accused of never having a job, but only having a hobby for most of my career. You know, I think we should visit things like the spousal benefit and the equity issues that it contains. I think even in terms of the survivor benefit, maybe we should enhance the survivor benefit, the benefit especially in retirement for the spouse, and maybe actually have that paid for with a larger adjustment in the primary benefit for the retiree. I think we need to think about this in the context of the 21st century, the era in which we are living and our children are living. And then the other thing that I think we should take a look at is we should take a look at the benefit structure. The benefit structure has varied. It's always been redistributive, at least in terms of the primary benefit formula, from day one. But there was a period of time when replacement rates for higher income workers were much higher than they are today. They were adjusted because it made logical sense in the financing of the program and the structure of benefits in that context when policymakers were looking at it. And Republicans and Democrats worked together on that. And they adjusted the benefit formula, and we didn't have a Civil War. Civil War was over in 1865. This was not passed until 1935. We didn't have a Civil War about it within our society. They accepted it. So maybe we can look at some of this structure of benefits. And I'm not talking about cutting benefits for somebody that's earning $108,000 a year. I'm talking about maybe slowing down the rate of growth of those benefits. The fact of the matter is, when you look at the rate of growth of benefits at $108,000 versus somebody at $35,000, and you move them forward through time, 20 years from now, this person at the very maximum is going to have had a much larger increase in their purchasing power than the guy down here at the lower level. Does this make sense in the context of a program where we're underfinanced?
Thank you, Doctor. Appreciate it. I'm out of time. Can Ms. Reno, Ms. Altman, real quickly, Chairman, if we're out, I get it. You sure? Okay.
I'll be very quick. The organization I'm representing does not take official positions on policy options. But we do have tools to lay out what some of those options are. My own personal view, I would agree with Syl that it does not make sense that a person who has worked hard all his life at a minimum wage, his or her life, should end up with a Social Security benefit below the poverty line. I mean, if you've worked all your life, you should be able to get out of poverty. So we need some targeted improvements for these long service, low paid workers. But I think in terms of solvency, it's instructive to think about the problem in a 75-year horizon and we don't need more money now, but we could make changes now to come up with a 75-year revenue plan that does a better job of matching our obligations.
Thank you.
The late, excuse me, the late Robert M. Ball, who spent 7 decades of his career working on Social Security, started the program in 1939, died in 2008, developed before his death a plan that leaves Social Security in close actuarial balance. It does it without benefit cuts, without increasing the retirement age, with no increased payments by 94% of American workers, and only an extremely modest increase for everyone else. It had 3 elements. And in my written statement, I describe it in my book. I have a chapter about it. I have a second proposal too, if you don't like this one. But the Ball plan had 3 parts. Most workers, as you know, have withholding every single week of the year because they earn under the maximum of $106,800. If you simply required workers to have 1 additional week of withholding, those earning over $106,800, which would mean, if it were in effect in 2010, people earning over that amount would pay about $130 more in 2010. That takes care of 1/3 of the problem. The second solution he put forward was, just by way of background, many experts from the beginning of the program thought that at some point there should be some general revenue contribution, that the employer puts in money, the employee puts in money, but the government should as well. And the policy reason is that there was a legacy debt. There was a decision to increase benefits early on, give adequate benefits to those close to retirement early on. And the idea was that should not be paid simply by workers and employers. And that is a continuing drag on the system. I'm trying to talk fast, but it's a complicated concept. But there is policy justification for doing it. He recognized, of course, that we don't have any general revenues right now. So what he suggested was, he saw all the battles over the estate tax. He understood that the estate tax made sense, that people who benefit the most from the commonwealth of this country, the roads, the police, and so forth, are the wealthiest. And the minimum we should ask is some minimal estate tax. So he proposed freezing the estate tax at 2009, but to avoid all the fights of where it should be, dedicating it to Social Security. Then you're about 2/3 of the way there. His third proposal was to do what every private pension plan in the country does, and that is diversify the portfolio. Don't change the benefits. It's not privatizing. The benefits continue to be guaranteed as a defined benefit plan, but about gradually increasing the amount invested in very safe, broad-based stock funds. And he had all kinds of protections and rules about it. Those 3 proposals together, as I say, put the program in close actuarial balance, which is a test the actuaries have been using since 1957, recognizing the uncertainty of projections. And if I may, just before I finish, I want to make one comment on what Representative Crowley said, and that is that I think your father's story is not unique. That one thing that gives this program so much popularity and support and strength is that it represents basic American values: reward for hard work, compassion, prudent conservative management, caring for your parents, caring for your community. We're all in it together. It carefully balances equity and adequacy. It's been a concern from the beginning to make sure there's a fair benefit for people, for every person, and an adequate benefit for those who need it the most.
Right.
So,
Mr. Chairman, thank you. I really appreciate the panel being on.
Thank
this
you.
call.
I would just say by way of a couple words of summary, because I have a commitment at this hour, at this minute at the Capitol, so we're going to end this. We have a lot to celebrate, looking at 75 years of contribution of the Social Security program into the lives of millions and millions and millions of Americans, not just those 50-some million Americans now receiving benefits, but over the decades. The hearing has established, I believe, that the benefit structure undergirding the financial security of Americans' retirement years is quite a modest benefit. That adjustments, looking at the prospects, Social Security will be able to continue to play this role in the next 75 years, are very, very strong. Further attention is needed. We're going to have another hearing on what proposals are being floated relative to changes in the system. We'll be holding that hearing in September. Sam, Mr. Johnson, you want to put something in the record?
Yes, please. Thank you. You know, there are members from both sides of the aisle who have said that raising the retirement age should be considered, and I'd just like to enter into the record that the Democrats who propose that include Joe Biden, Jim Clyburn, Max Baucus, and Steny Hoyer. May I enter that in the record?
You may, and I will then enter a statement of proposals from some of our colleagues and other leading Republicans relative to some of the proposals they're talking about in terms of changing Social Security. But we'll explore this in greater depth in the next hearing. Thank you very much, and on August 14th, let us salute people like Bob Ball and so many others that conceived this program, implemented the program, and have kept the program strong over all these decades. It's a tremendous legacy, and one that this subcommittee looks after with great intensity. Thank you.